Hi, it's Nero here from Investment Rise, and today I want to talk about what I expect to happen to Australia's property market in 2022. In particular, I want to look at the three factors that will determine the future of property prices in Australia, and then do a breakdown and go state by state to look at what I expect to happen in each of our different markets. So if you're someone who's thinking about investing in property, or if you're someone who's wondering whether you've missed the boat, or if you're trying to work out where is the best place to buy an investment property, I really hope that what I have to share today will be of value. Now, first, before we look at what I expect to happen to the property market, let's go back and look at what happened in 2021. Right now, it's no secret that freestanding house prices almost right across Australia went skywards, right? With many areas recording their highest annual percentage capital growth on record. Yet it's also the year that disproved many, traditional or popular property investing theories. Okay, for example, freestanding house prices rose significantly in 2021, but we had no migration in 2021. 2021 was a year where we saw freestanding house prices rise sharply, but unit prices, with some exceptions, barely moved. In fact, there were some suburbs where unit prices actually dropped, where in those very same suburbs, freestanding house prices went skywards. Okay? And 2021 was the year where we still had a lot of economic uncertainty because of COVID, and yet freestanding house prices rose significantly. So what did we learn? Well, if you look at the headlines at the moment, it seems that many media pundits didn't actually learn anything. But hopefully, if you've been following my work for some time, or you've just been studying the market, you're starting to see that property prices are essentially a function of supply and demand. And what we discovered, what became very obvious in 2021, is that based on our existing population right now in Australia, there is a significant undersupply of freestanding houses in most areas. In other words, in Australia, there are more people who want to buy a freestanding house to live in than there are freestanding houses available. Okay, now, without going back through history, this undersupply has essentially been building up since about 2016 due to some really, in my opinion, dumb policy decisions. But once these decisions were revoked, once interest rates were dropped, and then when the government introduced all those building incentives, etc., it created the perfect storm for all of that pent-up demand to come onto the market, and that drove property prices skywards. The question now is, well, what's going to happen to our property markets in 2022 and then 2023? Now, in November of last year, the major banks came out with their predictions, and without going through each one individually, they essentially predicted either virtually zero growth and even a price decline in some markets. Now, mind you, many of these predictions are being made by the very same people who predicted that property prices would drop 30% as a result of COVID. And mind you, in some of those very same markets, they didn't drop 30%, they actually rose 30%, right? So you do have to question the credibility of some of these predictions. So rather than looking at the individual headlines, let's actually go through the three factors that I expect will have the biggest impact on our property markets going forwards. And then we'll break things down state by state. Now, the first factor is the one that's getting a lot of airtime in the media, and that's the imminent rise of interest rates. Now, at the time that I published this, the Reserve Bank of Australia, the RBA, they are still maintaining that interest rates will only rise at the end of 2023 or even early 2024. Many people in the media are saying, no, it's going to happen in 2022. To me, it's an irrelevant debate. Because the fact is, interest rates will rise at some point in the future. All right? There is no doubt in my mind about that. But the question is, will a rise in interest rates cause the property market to crash? In my opinion, absolutely not. I do not see any sort of sharp price correction across Australia. Now, of course, a rise in interest rates will slow the rate of price growth, especially in our more expensive markets, Sydney and Melbourne. I'll talk more about that in a moment. However, let me be very clear here. The national median house price in Australia in 2022, in January 2022, I expect that to be the lowest we'll ever see going forwards. In other words, I do not expect our national median house price to drop as a result of any future interest rate rises. But as I said, different markets are going to perform differently. I've already mentioned that I expect Sydney and Melbourne to have a bit of a slowdown in their rate of growth just because of how high the prices are relative to income. But why don't I expect a crash in the property market when interest rates rise, especially when you consider just how much growth the national median house price had in 2021 and how high prices are generally across the country? Well, for property prices to crash, people would have to sell their homes for essentially less than they bought it for, okay? Or at least less than what it was worth, say, last year, right? And for them to have to do that, they would have to be in a position where they could no longer afford their mortgage repayments, okay? Mortgage default rates would be rising significantly, and therefore people would have to sell their homes just to clear their home loans, or the bank would be repossessing their homes, right? But do I see that happening? Well, the data shows there's very little chance of that happening. The banks are reporting that most mortgage holders, so people with a home loan, are actually significantly ahead of their home loan. In fact, CBA reported that Australian households would be sitting on an extra $230 billion worth of cash by the end of last year, right? And Australian households are using a good chunk of that cash to pay down credit card debt and to get ahead on their mortgages, okay? So with most Australian households significantly ahead on their repayments and with significant repayment buffers in play, why would they have to start fire selling their homes and have to sell their homes for less than it might have been worth, this time last year? It just doesn't make sense. Now, of course, I get it. It makes really good fodder for media headlines. But as a property investor, you need to start looking and basing your decisions based on data and facts, not emotion, popular opinion, and headlines, right? That's not going to work. And the data points to the fact that most Australians are very comfortable with their mortgages and that a rise in interest rates will not cause a crash in the property market. Now, as an aside, I actually enjoy investing in periods of time where there's a little bit of uncertainty about what's expected to happen to interest rates in the future. Why? Well, first of all, we see some buyers want to sit out of the market. They want to just wait and see what's going to happen. And in my experience over the last 19 years now, in fact 20 years now of investing in property all around Australia, more often than not, those people who wait and see end up regretting their decision to postpone in investing. Okay, but it does scare some people out of the market. Secondly, the uncertainty about interest rates and some of the media headlines also scares some sellers. And so it allows me to find better deals for myself and for our clients. But moving on, apart from interest rates though, there is the second factor that I think will have a much bigger impact on the property market. And as I said, it's what we learnt clearly in 2021 is the excess of demand over supply. The fact is that when you look at supply and demand numbers right now on a national level, our current volume of sales is similar to what it was back in 2010. But our population has grown by nearly 4 million since then, right? So we have a significant excess of demand. And I believe that excess of demand will continue to drive property prices higher. And if we learn anything from 2021, as I said already a couple of times, demand over supply is the biggest contributing factor towards the direction of property prices. And right now, because there's an excess of demand over supply in many markets, I expect that we are going to see some price growth. And I'll go through those individual markets in just a moment. Now, of course, if this is the first time you're coming across me, you might be skeptical, right? I mean, we're seeing weird headlines in the media. Yes, property prices are high. And we at Investment Rise, we make our money by helping people invest in property. So you might be thinking, well, why wouldn't I want to be so bullish about the property market, right? Fair point. But if you go through past episodes, what you'll see is that we accurately predicted the Sydney boom in 2011 when almost nobody else was talking about property prices rising. We predicted the downturn in Sydney and Melbourne between 2017 to 2019, which was definitely controversial at the time. And then we also said that property prices wouldn't crash in 2020 and that a boom would begin from the end of 2020, which is exactly what happened from October onwards. So you can go back and verify those predictions for yourself. And I guess the reason why we've had so much success in looking at what we expect to happen in the property market is because we are studying data, we're studying the fundamentals, and we're not basing our decisions off headlines and maybe what's popular out there. Now, in addition to what I've already spoken about, the third factor that I expect will really turbocharge price growth, especially in the freestanding house market, will be immigration. Now, of course, when we have more immigration, that increases demand. And as I've already said, we have an existing undersupply. So right now, there aren't enough houses for the number of people who want them. And we're about to open the floodgates of immigration. Okay, that's definitely going to increase demand, and I expect that will then increase prices as well. But it's going to happen in two steps. First of all, whenever migration does open up, we're going to see significant demand placed on rentals. So as high as rentals are in many areas across the country, as tight as vacancy rates are in many areas across the country, I expect that it's going to get even worse from a perspective of a tenant. Okay, so from a landlord, it's going to be good. We're going to see rents increase. We're going to see vacancy rates drop even further. And this is going to happen both in the house market and the apartment market as well. But then over time, many of the people from overseas who choose to call Australia home, they're either going to want to get into the property market by buying an investment property, or they're going to want their own home. That's going to add more demand and continue to see prices rise higher. So in a nutshell, if you're thinking about investing in property, you haven't missed the boat. There are still some great markets out there with scope for good capital growth, but yes, you're going to have to do your research, right? And now, before I go and give you a bit of a synopsis of what I expect to happen around the country, if you're new to my channel, welcome. I hope you're enjoying this video. If you are, please like this video and also hit that subscribe button and the notification bell so that you don't miss any of my future videos. I aim to upload a new episode every week. All right, so let's now go around the country looking at each of the individual markets, and let's begin with Hobart. Now, Hobart has been a surprise pack for many people. It's been one of the strongest markets across the country for the last 5, even 7 years. And so going forwards, what do I think is going to happen in the Hobart market? I think, look, it's going to stay strong. They've got a really strong economy. CommSec ranks it very highly based on the other states. And I expect prices will rise. However, I do not expect Hobart to be the strongest performer from a capital growth perspective going forwards, only because of how high prices are right now in Hobart relative to affordability. All right, so I do think you'll see some growth, but it'll be a lot softer than we've seen in previous years. Then let's look at Melbourne. Now, the Melbourne market does worry me. Okay, we've seen a huge loss in population as a result of all the lockdowns poor Melbourne's had and all the people wanting to move out. There's been a loss of about 100,000 jobs compared to this time 2 years ago, and there's still some significant oversupply. So I do believe that the Melbourne market is going to struggle. It's the market where I think the rental yields are still the worst in the country, and it's going to take a while for it to come right. So I do expect that Melbourne will be among the worst performers in 2022. Sure, you might see a little bit of price growth, but I don't expect it to compete with many of the other markets around the country. In fact, even in December of 2021, according to CoreLogic, Melbourne was the only market that had a slight negative growth, so prices actually dropped. Sure, it was slight, but again, it just highlights the fact that we're already starting to see some cracks in the Melbourne market, and it's not a market I'm hugely in favor of for 2022. Then let's look at Sydney. Now, Sydney is a market that has traditionally been the best performer in terms of capital growth, but It, as well as the Sydney market did in 2021, it was not our best performer in terms of capital growth. And I think going forwards in 2022, you're going to have to be careful about the Sydney market, because you will see that whatever our median house price is in Sydney right now, I think it's about 1.5 million based on which report you read, it's going to be higher in 12 months' time. But it's not going to be an accurate reflection of what's happening in the Sydney market, because I think that in some of the suburbs that are more expensive and are very tightly held, so there's significant undersupply, especially like in the North Shore of Sydney, those markets are going to continue to grow strongly. But in other markets, especially in the Western Sydney, where I'm seeing lots of new listings, there is a chance of oversupply. I think growth in those markets could be muted. And so you really need to be careful about Sydney market, doing your research, looking at the individual suburbs, looking at things like time on market, are properties taking longer to sell, or they're selling more quickly, and really doing a lot of due diligence, because I think there will be some suburbs in Sydney that do very well, and some suburbs that won't do well at all, but yet the median house price in Sydney will still show an increase. That's what you're going to see in the media. So with Sydney, do your due diligence and make sure you're attacking the suburbs that have the highest potential for capital growth. But if they're out of your affordability range, don't worry, because there are going to be other markets around the country that are going to do a lot better. And I guess one of the markets that I think will do a lot better than Sydney is the Brisbane market. Right? According to CoreLogic, in 2021, it was the best performer in terms of capital growth, at least among all of our capital cities. And in 2022, I expect that's going to happen again. I do expect Brisbane market will have the strongest annual percentage capital growth. I expect double-digit percentage capital growth for Brisbane in 2022, potentially even 20% plus. And the reason why I guess I'm so bullish on the Brisbane market, and there are a few reasons, is prices have been depressed for so long. I mean, really sort of the last 18 months is the first time we've seen some significant price growth in the Brisbane market. The median price is still $700,000 for freestanding homes, which is less than half of what it is in Sydney. We've got significant demand driven by people moving to Brisbane and the greater Brisbane area. So that includes Gold Coast and Sunshine Coast, people moving up there from Sydney and Melbourne. We've got a significant infrastructure investment happening as a result of the Olympic Games. So there's just a lot happening in Brisbane right now, and combine that with the fact that, with the low prices, the higher rental returns. Brisbane rental returns are far higher than Sydney and Melbourne, for example. Even if there is an interest rate hike, it'll have a far less of an impact on the Brisbane market. And so yes, I expect the Brisbane market, especially among our capital cities, to be the strongest performing market going forwards. Moving on to Perth. Now, Perth is a market that a lot of people seem interested in. Okay, and 2021 was a good year for the Perth market, no doubt about it. However, there are two things that concern me about the Perth market. Number one, in 2021, the median house price in Perth finally reached or regained its highs that reached back in sort of 2014, 2015. Okay, so it was a long time between seeing some growth for people who bought in 2014, 2015, and that could happen again if the Perth market decides to go flat. But secondly, I think investing in Perth is really a bit of a gamble, because you're essentially investing in a very large mining town. Okay, mining is still the biggest industry driving the Western Australian market, and obviously Perth as well. And so if China decides to do something silly, or if mining doesn't go as well as everyone expects, I wouldn't have a lot of faith in the Perth market. So although at the moment, based on everything I'm seeing, I do expect Perth to do well, I do think it's a higher risk investment. And if you're someone who's looking to buy your first investment property, or even your second investment property, looking for sort of safe investing, yes, getting good capital growth, and yes, getting positive cash flow, I believe there are going to be more, but safer and even better investment opportunities than looking in Perth. Then let's look at Adelaide. Now, Adelaide is a market that again had a good year in 2021. I do expect to see some strong growth in Adelaide in 2022 as well, again based on a lot of demand as people from Melbourne moving into Adelaide, and the fact that the Adelaide market has been depressed for quite some time. Darwin is a market that for me is a little too volatile. I don't see a lot of the key fundamental factors in terms of jobs growth, etc., that I see in some of the other markets. So I'd probably say Darwin is a market that I would personally avoid in 2022. And then finally, regional areas. right? There's no doubt in 2021 we saw a lot of regional areas prices rise significantly. Some regional areas even outperformed some of the capital cities. So are regional areas then something to consider in 2022? Well, yes and no. And what I mean by that is this. I expect that the new norm going forwards is that most, especially corporate employees, are going to have some sort of blended working environment. So they won't have to go back to work full time, no, but neither will they be able to work from home full time either, right? They're going to have to go into work maybe 2 or 3 days a week. Right? And so what that's going to do is it's going to place a bit of a limit on demand because people will need to be able to commute to work from where they live, or the regional area that they live has to have enough jobs to sustain them. Okay? And so I think you're going to have to be careful about regional areas. I expect in general, regional areas won't perform as well as capital cities, but yeah, there are going to be some exceptions. For example, the Sunshine Coast in Queensland, Port Macquarie in New South Wales, the Central Coast in New South Wales. And again, I bring up those areas because they're areas where either you can commute to work from there, especially in a capital city, or they have enough jobs and those areas are self-sustaining in and of themselves. So if you're looking to invest in a regional area, ask yourself this question. Are there enough jobs for the population that's moving into the area? And or can they get to work within an hour, maybe even an hour and a half at the outside? Okay? And if the answer to those questions is yes, then it may be worth considering. So there you have it, what I expect to happen in 2022. Essentially, I expect 2022 to be another strong year for the property market across Australia, but you will need to do your research, and if you do, I expect you'll be able to find some great opportunities with strong capital growth for 2022 and into 2023 and beyond. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio that pays you an income each and every month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.